forex.com, January 23rd, 2018. Let's take a look at markets here. We've been up, we've been down. Just want to show you what I'm looking at here in terms of a setup. Don't forget, right now we are looking at markets trading at all-time highs. We've had an amazing, respectable run. The bulls have really taken control of this market. In fact, it's been very bullish going back to the lows of early 2016. Market's been up since then. But right now what I'm looking at here hour to hour is, it seems to me that we just made another intraday high as far as the ES futures or the S&P 500 futures. You can see here hour to hour we went higher. And now take a look at this RSI. RSI, in my opinion, looks like it could very easily be rejected when trying to move above 69.1 on the hourly. That is not a good sign for those who've been playing this, because at some point the market is going to have to pull back, and it's things like this that set the stage for a pullback. Negative divergence, and especially when it comes after a big run. So here we made intraday highs. Take a look at the technicals right there. Additionally, if I take a look at the hourly chart for the VIX, you can see that coming off recent lows for the VIX at 8.92, this is where the RSI moved above a range. So it should look something like this right here. RSI moves above that range, and we can show that clearly right there in yellow. Coincides with that price movement. What we can do is draw a line from there, which is our uniformity principle. Anytime we bounce on this line, it's hard to see there, use a different color. That one's hard to see also, so let's just go with white right here. You can see this here, and we bounced on this line already twice as far as the VIX hourly is concerned. Looks like that is good enough to set the stage for the VIX to start moving higher as that negative divergence plays out in the market. In other words, around here you start looking at the potential for this market to start pulling back, primarily because of the ES or the S&P 500 futures. And in fact, if I was to zoom in here so we can see this even clearly, let's zoom in to the action right here. Now we can see it a little bit better, and you can see right now RSI is moving back below 69.1. That is confirmation of rejection, or looks like it is going to be confirmation of rejection. And so as we made an improvement to fresh intraday highs, all-time intraday highs for the NASDAQ over the last hour, this has come at the expense of the technicals. That negative divergence could very easily set the stage for a meaningful pullback, maybe even a major high. And again, let me stress this just one more time. The key here, in my opinion, is this action here. Improvement to fresh all-time intraday highs, but this has come at the expense of the technicals. We have uniform activity right now, rejection on the ES futures. And so around here, based on that, you can take that understanding of the technical setup and position yourself short, because we've been in a big run. And at some point, this was going to have to take a break, if not even a major high. As we can see for the S&P 500, we've been on a big run since the lows of early 2016. Pretty much this market has been on a tear. Such a strong move. At some point, S&P 500 is going to have to take a break. NASDAQ also, since the lows here, has been on a tremendous bull run. Right now at fresh all-time highs. And take a look at the Dow. Also at fresh all-time highs this week, off the lows here of early 2016. Another very strong run. Take a look at this on a monthly chart off the lows of 2009. We've seen a tremendous bull market, and in fact over the last couple of months we've really started picking up momentum. And this is pretty much because of this very strong RSI 69.1 phenomena. That's for the Dow. Same thing can be said for the NASDAQ, trading at all-time highs. We can see that here we've picked up momentum. So we are going into a hyperbolic phase. And again, the strength is because we've held above 69.1 pretty much for the last 12 months. S&P 500, as you can see, also has picked up momentum as a consequence of this RSI staying above 69.1, picking up momentum over the last couple of months here. On the daily, we can see on the daily for the SPX, the reason why we've gone on a major accelerated run here pretty much is because RSI has been holding above 69.1 on the daily. Same thing for the NASDAQ, picking up momentum over the last couple of days. In fact, since 2018 began, because the RSI jumped above 69.1, and also for the Dow, fresh all-time intraday highs today. I believe that's a fresh all-time intraday highs. And again, take a look at all this strength above 69.1 and pretty much above 69.1 here. Whenever you see that, it's a sign of a strong instrument. So again, in terms of timing, back to the S&P 500 futures, what I'm looking at here early is we made a fresh move, or move to fresh all-time highs as far as the S&P 500 futures are concerned. But the problem with this setup, as I've stated before, is we've done this with declining technical strength, and more importantly, we made that high while the RSI has been rejected, and this rejection at 69.1 has come with uniform activity rejection. In other words, it went above 69.1 and back below it with uniform action. That tends to be a good sign of negative divergence, suggesting around here we can start looking for a reason or position ourselves to take advantage of an impending short-term, maybe major pullback from current levels. Before I conclude, let me show you where this market is trading. So that's a live trading. And just for the sake of relevancy, this is how the cryptos are trading today, being January 23rd, 2018. Alright, that's it. I'll see you guys in the next video. Peace and blessings. EACS.